The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. So we're going to take a look at cotton this morning. This is something I don't trade, but I do watch it. I have some friends that are in the cotton business. You'll notice that this market made a unusually asymmetrical three drive to a top when it went limit up 2 days in a row. That marked the top, and from that level, it's dropped just about $5,000 down into the 786 retracement of that whole move. So cotton must hold at this 76 and change level. Otherwise, it's going to be the major top for the year, most probably, and we're going to go a lot lower. But we're sitting right on major support, and not only that, but it's two quiet down days coming into it. So that's something that is, I think, important to watch if you trade cotton. I'm showing it to you just as a technical indicator. That's pretty much, why I'm showing it to you. But just kind of watch it. We'll watch it over the next day or two just to see if the numbers work or not. The only reason I don't trade cotton was back in 1973. I was long 10 contracts of cotton. It was limit bid. I told my broker to sell it. I was filled limit down, and I could hear on the squawk box the broker says, does he want the frickin' thing or not? And my broker kept shaking his head, yes. Well, it locked limit down, and I did get out, but it went limit a couple more days. But it was a thinner market then. Now we have electronic trading. It's certainly, a lot different than that. So we'll watch it now. There's a lot of talk this morning here in the Tiger Den about the fact that we've made new lows in heating oil and also new lows in the market for gasoline overnight. Now, we did not quite do that in the oils yet. It missed it by a little bit, but it's still very, very early. But I wanted to bring back a little bit of history here in the oil market just to get an idea of where we've been over the last several decades. We'll put up the chart here, going back a monthly chart, taking us back into the 1990s. If you'll look at that one on the left there where it says the Desert Storm War, that was as you can see, it was a 1.27 expansion from the high following the Iranian hostage thing back in the 80s. That was also, if you did a daily picture on this, it was a beautiful butterfly pattern up there at $42 a barrel, and the market broke $11 in one day, and that was the biggest move up until 2008 when we were going down from the Goldman Sachs prediction of $200 a barrel oil, and later on we found out that, guess what, they were shorting up there. Very strange. Anyway, that's what's happened here. But the other one that's very interesting, if you look at the one in 1999, where it was making a double bottom there at the $11 a barrel. If you look really closely, and I couldn't blow it up enough, but it was a beautiful three drive to a bottom pattern there. And my good friend Mark Douglas has come out to visit me again. He and Paula came to Tucson. They eventually moved to Tucson in '96, and but we had a three drive to a bottom pattern then, and we were having a little get together with 25 of the traders from the Tucson area that we worked with over the years. This was back in '91. There's well over 50 of them now. But we used to have regular meetings, and we would, rent a hotel. And this hotel was brand new. And as a special deal, they gave us a beautiful room for $50. And of course, we had to buy the refreshment, but it was really cool. But anyway, it was making a beautiful three drive to a bottom at that point. And you could buy in oil at $11, you could buy an option 2 months out, $1 above strike, at I think it was $275. And those things, when they went nuts. They made like $2,500 in a matter of, I think 3 weeks. And, all you had to do was keep rolling them over, and it would have made an absolute fortune. That just through 2000. That wasn't counted what happened in 2007. That was an unusual move when we went up and made that high at $152 a barrel. Actually, it was $147 a barrel. But if you measured the ABCD leg from the 99 low to the high in 2006, to the high of 2005, the low of 2006, which was a 382 retracement, that measured to 147. So that was pretty much spot on. And then, of course, here's where we are now. The reason why I'm bringing this out is that someone approached me yesterday to pay me a substantial sum of money to do a analysis of oil on where I thought the price of oil was going to be. And I tried to explain to him, as I said, this is just my opinion. I really don't know where oil is going to be. I can only give you my opinion. He said, well, we'd like to pay you. I said, look, do this. Why don't you give this amount of money to the push-ups for charity? And I said, I'll do the analysis for you. I tell you, it's not going to take me half an hour. And he said, okay. He said, fine. So I sent this to him, and I told him, we're at major support here in oil at roughly $47, $46 a barrel. If we broke below that, the next stop is 36. And he said, okay, that's good enough. I said, boy, you're a really easy mark. I said, you should be really careful about, what you offer people. And so anyway, this is just an opinion when you're doing this. This is why when you see Goldman Sachs come out and say, we think oil's going to $200 a barrel, remember where they're coming from on this, folks. That's the whole thing, because what people say and what people do are totally different. I mean, and you got to remember that, even with me or Tom or Basil, Steve Rhodes, any of the guys out there, it's just Andy Heck, David White, any of them. I hope I didn't miss anybody, but that's what it's just an opinion. You're the one that has to take the responsibility for it. And, I don't do fundamentals, so I'm about the last one, to ask about the fundamentals of these things. And that's the main thing. No, it wasn't T. Boone Pickens. It was a hedge fund guy out of Houston, but he really was confused to where the market was going. And I said, everybody's confused. I said, we've had a big bull market. We've had a correction, and what we're doing is correcting into a bear market, but we don't know how high it's going to go or how low it's going to go. All I can do is tell you you're at critical levels right now. The fact that crude didn't make new lows yet, and as I say yet with a big YET, is still, it could mean something, because if crude can turn today and close above, say, 48.50, then that would be a significant bottom, and most probably your heating oil and gasoline would follow along. But if they that's correct. You think about the housing bubble. It's the same thing, guys. They just do the same thing over and over again. They started this stuff, way back with the Babylonians and the Sumerians thousands of years ago. We had the South Sea Island bubble, the Florida land boom, all of these things. They all have the same characteristics that people, it's a matter of greed, and that's the main thing that you have to realize. That's why being a chartist is very helpful, because you can see the sum total of the buyers and sellers. You didn't have to be a rocket scientist to realize sometimes after $147 a barrel, something was not right. And that's the main thing. So we'll get right back more of this a little bit later. I'll try to get off my soapbox and get on to some of these markets to see what we're doing. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart of the gasoline future since we were talking about the divergence between gasoline and heating oil making new lows, and crude oil hasn't done it yet. I mean, yet is a big if, of course, because it's, half a buck away, so that's nothing in crude oil. That's someone picking up the phone in Singapore. Anyway, if you'll look at this gasoline chart, you'll see that we did go down and make the 61% retracement. As of Friday, we'd only hit the 51% retracement, but what we did overnight, of course, is make new lows over Monday. That took us down to the 61% retracement in the gasoline. Now, heating oil has held up a little bit better because it's already gone through the 61% retracement, but not by very much. But we did take out the previous day's low. So all we're doing is seeing some type of a little bit of a minor support. And I emphasize minor support here in the crude oil with this $47 a barrel level. That could disappear in a matter of seconds, as we know. Now, there's another market that's on the radar here, and that's the gold market, and I'm a little bit of a quandary in here to take a look at this. If you give me 1 second to put the chart up, this is as I posted it in the letter this weekend for 24/7. You'll notice that we were heading towards this $13.20 per ounce, which is the 78% retracement. That's also a 3-drive to a top pattern. You can see that very, very clearly by looking at the symmetrical triangles. They're just about as perfect as you can possibly get. Now, we went up and just about matched the high from April at 12.97 and change. Now, part of this is due to the rollover between the June and the August. Now, August is trading at has hit 12.96.5, but the June has only been up to 12.92. So there's a little bit of a difference there that you have to take into effect when you're looking at these different contracts. So right now, it appears that we're almost at a double top from where we were in April. The problem that I see here, folks, is in the silver market. Silver is a really it's 1/6 the volume and open interest of the gold. But because of that, when it moves very, very quickly. But over the last 3 days, silver's only been able to make new highs by 1 or 2 cents a day. That is not characteristic of how silver really takes off. Now, this could change in 20 minutes, but when I look at this, I say, gee, why is silver, lagging so badly? And then I take a look at platinum, and I see pretty much the same thing. So I'm not sure this is going to be, a big breakout in the gold market, but, it appears that it's going to. But if we could just get silver moving, then it would be really, really interesting to see if it's going to, line up the way we think it is. But remember, all these markets are separate. They have different cycles, and so you should trade each one of them separately. That's the best way to do it, and that's one of the reasons why pattern recognition is probably, it's been good for me, but, who knows, to see what's going on. Yeah, boring is correct. Anyway, we'll take a look here at a few of these other markets. The euro is still up in this zone, folks. To me, this is really, really an interesting spot here in the euro. We've talked about this for several days now. We'll do it again through the eyes of the U.S. dollar index because we're spot on here with the dollar index hitting that exact 61% retracement, and it has held so far. I think the low was 96.56. The euro got up to 112.85. We backed off about 70 pips from that level, and we needed to close above that 113.40 level in the euro. That would tell us that we'd have a pretty good move, potentially, getting a little bit higher in the euro. But remember, long-term, the euro is still in a, very, very bearish scenario. There's, it just has, lower tops, lower bottoms, and, it's just got all the things necessary to make the market go a lot lower. Remember on the weekly charts that usually about every 3 weeks I post the weekly chart for the euro. We have several, I think 3 different ABCD patterns that come in to around the 98 to 99 level in the euro, and that is still a high level because the euro has been as low as 85. It came out in 99 to trade at, I think, at 127. We went down to 85, and 85 up to 164, then back to 85 again, and then up to 130, 147. So it's been all over the map, and you'll watch it here as it trades very, very. As it trades as perfectly as anything you could possibly ask to trade. It just is the best vehicle for trading that I have ever seen in all of my years of trading. There's just nothing like it. It just follows the patterns. It follows the harmonic numbers. It's really, really exciting to watch this thing come to fruition. Now, I've had a question from one of our listeners in the wonderful city of Hong Kong. Let me bring this chart up. This is a long-term weekly chart of the Hang Seng Index. And if you'll notice here that we had this back in 2016, we had this major low. This is when we were bottoming in our stock market also. That was finishing an ABCD pattern. And then we had the rally up to the 61% retracement. We backed off to 50%. And as you can see now, we're hitting the 78% retracement. The market closed last night at 25,912. That puts it spot on to the 78 and 1.618 expansion. So this should be an area where we'd be looking at for the Hang Seng to start to have a pretty good correction. If you'll notice the circles that are in there showing the head and shoulders pattern, I did that to show the time sequences that you like to see. The other thing that's interesting, if you'll notice that the left shoulder and the right shoulder are very, very symmetrical. That's another reason why it's important. And the market did come down from, dropped over 15% from that level, finding support at the 50% level. Now we're finishing the ABC up here at the 78% level in the Hang Seng. We'll keep an eye on this, of course, over the next few days because these markets could easily turn and, move higher to see what's going on with some of these things. Okay, one other question that someone asked me, and that was about, what was it? I forgot. I had it written down, and I didn't get it right. Let's see. Oh, maybe it will come together in just a moment here. I know what it was. Bear with me here 1 second. We are at a really critical level here in these Treasury bonds. Hold on, folks. Let me get to this level right here. 1 second here. I want to get to the bonds. This is the September bond contract, the continuation chart. And we talked a little bit about this yesterday. We did get above the 115 level by just a little bit, but the actual taking out that high of April, we were able to do that by a tick or two. We've not been able to do that in the Treasury notes. The notes are still lagging, and so that's another reason to think, well, maybe this bond move is not as bullish as it should be on the breakout, because some people are saying that there's going to be an increase in rates, and some people say there's not. And here again, you have your opinion, so you look at the charts and say, okay, tell me what do you think is going to happen. I think you'll know by the end of this week, which is 2 more days, and we'll see what happens. Remember, we're going to have a guest, Norm Winsky, on Thursday, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we had a question that someone called in about that I wasn't able to catch, and that was if they were short crude oil from the 48.20 level, and they wanted to know what I thought, and I think I should call you and ask what you think. Basically, what I would do is use a 50-point trailing stop on it. That's about all you can do. So keep an eye on it. That was a major fib point up there at 48.25. That was the fib point of the previous day's high, exactly 61% retracement. The only thing that I can see, and it's really still breaking down today, is that it's got a chance to hold those lows, but frankly, it's you're holding on with a wet noodle basically. So it looks like oil's heading down to break that 46 level without too much trouble. If it doesn't do it in the next hour or two, then I would say you might want to lower your stop even a little bit more, only because the heating oil, and I just posted the gasoline futures. You'll notice that they're sitting right at the 61% retracement now by making new lows overnight. Now, we didn't do that in crude yet, and yet is the key word, because we probably will before the day is over, because it's weakening right now. We're really close to that $47 a barrel now. So if it gets below that, then you'll take a different look at it. Another market that you really should start to pay attention to, folks, is the soybean market, and also the wheat market and the corn market. You know, we're at levels at relatively low prices as far as we've seen over a long period of time. But the important thing about this is that we're over some very strong seasonal tendencies for the grains to rally after Memorial Day into July 4th is when corn usually makes its seasonal high in that first week in July. So you're talking a period of about 7 weeks here where you could get a pretty substantial run here in corn, beans, and meal, and wheat if they do start to move up. We do have ample supplies, but we've had some really strange weather with so much wet weather where they've changed from corn to soybeans that might affect it. But soybeans, they don't have the resiliency that they have in the corn, so when it gets really hot, because they're a shallower plant, they have a tendency to burn up, and that's what causes these wild fluctuations that we get. But those are just neither here nor there. About the stock market, folks, we talked about, you know, the wedge that we had in the NASDAQ yesterday. We also talked about the New York. I'll put up this New York Stock Exchange from yesterday, because this is actually from Monday. We were down a little bit yesterday. If you take a look at this, we did have an ABCD structure going back from April the 15th to May the 18th, and then the high at the 1.27 yesterday, which was an ABCD. That means we should get a correction. How much, I don't know, but the whole world is very, very bullish, especially the composite. I was listening to Tim Cook last night, and my goodness, you'd think that, well, it was more of a come-to-Jesus moment. It really was. But there's a certain type of mentality that Apple has that makes everything work, and I think they have the same thing at Amazon and certainly Google. These stocks have done, you know, some fantastic things. So we want to pay close attention here, because when this market does turn, and if it does, and it will, then you're going to see some fireworks, because they don't open the door for getting out as easily as they open the door for getting in. So remember the old market adage: it's much better to be out of a market wishing I was in than in a market wishing I was out. That's the key that you want to remember. So watch these very, very closely. We're at some real critical levels as we go here and look at some of these things this morning. I'm very interested in the bean complex, because of the fact that these November beans have held really strong support, and we had this major ABCD pattern in the July beans on a long-term weekly basis. I focused on that in the newsletter for 24/7, and that was a real interesting one, you know, to keep an eye on, because that could be really significant here, because we know that beans have a tendency to, you know, have a pretty good move. They're up a little bit today, which is good, and wheat is, of course, leading the pack, but we'll wait and see how it ends up before it's all over in here. All righty, now let's go on to the next question that someone brought to us, and that was about the Japanese yen. Folks, I want to bring this to your attention right now, because the Japanese yen is setting, let me just get this to you right now, we are setting right at the old 1.618786 expansion at this 109.30 and change. So watch the Japanese yen today, because it is setting right there at 109.37. It's been here for well over an hour. That's exactly the 1.618 number. So watch it very, very closely, because if it turns, that could be a real interesting to look at. Now, we've asked several questions here. Well, one question about the E-mini S&P, folks. We hit that 2440 level. We've only come off 13 points. The minimum that should come off for a minor correction would be about 25 points, and that's basically nothing. So keep an eye on this one because maybe the top is in, maybe it isn't. It certainly doesn't act like the top because there's certainly no panic coming in here. There's more people willing to buy it down here at 24, 27 than there are willing to sell it. There's nothing really going on, especially with the market opening down with a strong risk advanced decline and decline to advance. It also makes it very, very interesting. So it's important to see that this market is holding up relatively well. It's very, very quiet. And we see this in the volatility index because the volatility index is not moving very much. It's not going down. It just made a huge ABCD pattern over the past several months when we get down here to this 970 level again. But that's all it's really done. There's been nothing really dramatic happening with it. What I would do is, and this is what I am doing, is I would watch for the first bounce that we get in the S&P, and we will get one, of course, to see what it's going to give us, whether it's going to be a 382 bounce off of the 2440 level, or maybe it'll be a 61, or maybe a 78%. We've got to, gauge that, as we look at the market, during the day. But as far as a big top end, I think we're really, really close. The question is it here, or is it going to be out into the full moon that we have here on the 8th, which is 2 days away from here? By the way, folks, I will be traveling tomorrow, so I won't be it's an early morning flight. We get back to Tucson really early, so I'll be back to normal, no more travel. So I'm very, very happy about that. And even though traveling is not as much fun as it used to be, because going through the airports, especially when you travel international, it's even if you have your TSA passes, which you get priority, they don't respect those in foreign countries, and so you really have to be prepared to go through the turnstiles very, very slowly. But believe me, it's nothing like it is in Japan. Japan is by far the worst. They do everything but strip search you there. And it's really intense. But all the other countries are pretty much the same. The lines are big. That's the problem. You got a long line to wait, and that makes it a little more difficult. But these are the things that you have to put up with as you travel. But it's worth it because you get to see some wonderful parts of the world, and you get some great friends, which is really a lot of fun.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
We're really attempting to take out these highs of April. We're way behind in silver. Silver's only 2 cents above the 61% retracement level. The fact that it's above it is a good sign, but we're at a real critical time here, astrological. Just on a short-term basis, there's a little aspect based on some things that we look at that might make the market turn down here in the next half hour and go. We'll just put that on the weather market on the radar market for tomorrow to see if that is going to happen. One of the questions that came up during the break here is about the support that we have at 24.27. We hit 24.26 in the E-mini S&P. That's just a normal retracement level. This market is not acting very bearish at all. You would think there'd be a wide-ranging bar down, which would give you some idea that would be holding. We'll be able to see if that's the case. I don't know if it's going to be the case or not, but that's what it looks like right now. But if we get below 24.24, then that would probably start to make the selling come in for just a little bit more. Now, I wanted to review something about this wedge formation that has been in the business or been on the internet for quite a bit. I had a question about it yesterday from someone who called me, and hardly anybody ever calls me. You'll notice that we do have this rising wedge on this NASDAQ composite. You just don't know when it's going to be rectified, either going higher or whether it's going to top in this area. I don't know, but that area of 6305 was some major Fibonacci resistance on expansion numbers, going back a long way. So that's just part of it. But as I mentioned yesterday, and I think it's important, is you want to see get this thing going here. You'll be able to see what this looks like on a 60-minute chart, looking at the same thing, because you can see all we've done so far is we haven't even begun to come down to that red line. We're not even anywhere close to that. We're not even down, basically. So you can see how strong, the market really is. That's the one thing to watch. There's another thing that people are talking about on the internet on some of these different sites that people send me information on, and I like to hear what people are thinking. But they're making the comparison between Europe and Asia and the United States and our different markets, folks. Those are like comparing apples and grapefruit and bananas. I mean, each of those markets are different. I don't know how you can possibly make that assumption. Oh, we got a caller in. Hey, one of our favorite people, John from Philadelphia. How are you, Mr. Z?
Hey, welcome to Philadelphia, sir.
Yep, one more day and it's back to paradise. What can I do for you, my friend?
By the way, first I want to tell you I myself prefer grapefruit over bananas.
Me too. I like the red grapefruit myself.
Wanted to ask you, please, about the bond contract. And specifically this question. Do you think the odds are in our favor for this rally that has been occurring the past couple of weeks to extend higher, kind of towards that 158, 160 ABCD targets. And the second question, it's related, but they're actually distinct. Where is the really low risk short if we get a little bit higher?
I think it would be at 157, John, but I'm not sure, and that's in the September bonds, but I don't know if we're going to get there or not. You know, we've been rallying for several months now, coming off that 61% retracement down there in the 140s, and I think that this has been a really meager rally in both notes and bonds, and primarily because the whole world, you know, thought the thing was going to fall out of bed, and it didn't, so this is a short-covering rally, but if you ever wanted to describe a dead cat bounce, this would probably be it. That's just my opinion, but, you know, that's neither here nor there, but that is my opinion. Long term, I'm extremely bearish bonds. That big chart that we posted yesterday showing the wedge and the butterfly pattern at 177, that's pretty much it. As far as how low we can go, remember, we used to have 4% rates all the time in the 30-year bond, and, you know, that would take them down to about the 125 area for that, because what they've done with those bonds is they've basically taxed, you know, people that are on fixed income, you know, people like me.
Yeah,
so anyway,
yeah,
that's what I see.
Yeah, appreciate that very much. Just an observation on that very topic. Back in December, the December 15th, right as the Federal Reserve was convening and raised the Fed funds rate 25 basis points, and bonds were making a low down at 146, having, you know, gotten very deeply oversold off that 177 high the prior summer. At that time, at those lows, the CFTC's commitment of traders data was showing speculators were just pressing. They were loading the boat on the short side. Mm-hmm. And I remember reading, I was reading stuff out of Zero Hedge, who was, and I don't know where they were getting their data, but it proved to be correct, namely that foreign government buyers were back in buying the lows in the bonds, notably the Chinese. Well, here we are, you know, 6 months later. Perhaps we're in process of running and completing an ABCD pattern up off those deep lows. Mm-hmm. And now two things have happened. The same CFTC data is showing speculators as a group has loaded the boat on the long side this time. And then this week I'm listening to the Bloomberg headlines saying, oh, yeah, the Chinese government is back in buying the U.S. long bond again big. And so it seems to be exactly the flip side fundamentally, or at least news flow-wise, to last December, and hence my interest in wondering where the low-risk short is if we get higher.
Well, my guess is it's either today or at the 157 level, which would, you know, be near a just a little above the 50% retracement level, be another ABCD pattern there. So those are the ones that I'm looking at. But I just posted the chart of the long-term weekly here, John, and you can see this has really been a very, very meager rally, considering, you know, if that 618 was a major bottom, it should have exploded out of here, and we should be trading up near the 158, 160 level already, but we're not. And that's another factor that makes me go in. And the same thing's happening in the Treasury notes. If you take a look at that chart, we're looking at the same thing, where the rally has been very, very meager.
Right, right. Thanks for posting that weekly chart on the Tiger TV. That's very helpful. Appreciate that. Just one parting comment I wanted to share with you as we end the call here. You were commenting about the price action of silver lagging the price action of gold. And silver is rallying over the 618 as we speak.
Yep. Well, thanks for calling in, my friend. I really appreciate it. May God bless.
You as well. Bye.
Bye-bye.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've just made a new high in gold for the day. We're attempting to take out those highs from April. This is very important that we go blasting through here pretty quickly and with a lot of gusto. Otherwise, we've got a chance for gold to turn down. We'll revisit this tomorrow for sure. And the other one, of course, is to watch this Japanese yen versus the U.S. dollar down here at this 109.38 level. That was a 1.618 expansion and also a 78% retracement on the longer-term time frame. We'll revisit those tomorrow just to give the folks an idea when we look at some of these things that we try to put a pattern together that brings it down to a microscopic view of looking at something over the past 24 to 48 hours to see the pattern that is there would give you the lowest possible risk for entry. And that's, what your job is as a trader as you get prepared to do these things is to do that. Remember, when you're trading an hourly chart, that means you're not trading a monthly chart or a weekly chart. The risk is certainly a lot less on the hourly chart than it would be on a weekly or monthly. That's why you go down to the microscopic level to try to get your levels to where you don't have to risk very much at all. That's the real key, to using pattern recognition on a longer-term basis and then also as you enter the trade on the short-term basis, because the only thing that you can control is your risk. You don't know how much you're going to make ever, and you don't know whether you're going to be right or wrong. So the only thing you can control is the risk-reward equation is the risk, and that's what your whole job should be. Think about what you're risking, not how much you're making. That's how people that are pretty successful in this business make it work. So that's something that I think should pay attention to. Anyway, we want to remember we're going to have Norm here on Thursday. We'll have Rich Anderson on Friday, and hopefully we're going to have Bill Meridian early next week. And then later in the week, we're hoping to have Stan Harley on. So we got some nice guests coming in who always give us some great information. And I'm still working to get Larry Williams. He's just hard to nail him down. So 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.